Welcome back. Upstart, an AI-powered lending platform, sliding this morning down 13.5% despite beating on top and bottom lines. The company partners with banks and credit unions to provide credit products and automate loans. This is banks' look to further integrate AI into their business models. Joining us now, Upstart CEO Dave Girouard. Dave, what do you make of the stock reaction to what on the surface feels like pretty good earnings this morning?
Yeah, Leslie, look, I mean, obviously I wish it were better, but, I sleep well at night knowing that long-term the stock is going to follow the performance of the business, and we feel very good about that. Q2 was a great quarter for Upstart. We grew 102% year on year. We returned to GAAP profitability. 92% of the loans on our platform are completely automated by AI. Most of the funding, the majority of the funding on our platform comes from long-term committed partnerships with private credit. We beat guidance on the top line and on the bottom line pretty significantly. So a little hard to, understand the reaction, but that's what it is. We just try to keep going and build the business.
Yeah, I saw the 92% figure in your slide deck of the loans that are fully automated, and that's up from 73% just 3 years ago. What drives the higher automation, and why are those that are automatically reviewed more likely to be approved than the ones that are manually reviewed?
Yeah, it's it's the power of AI. A loan product is really a function of risk, and the amount that you pay on a loan and the process you go through is really about the lender de-risking that loan and trying to make it work for them. And when you bring AI into the picture, you can do a lot of that through models and much more quickly. So what you get is a process where rather than wait a day or stand in line or call somebody, walk into a bank branch, everything happens instantly and the loan is available instantly. Those convert a lot better for a lot of reasons, but the most important is it's right there when you were asking for it. If you don't have to go retrieve some documents or upload them or again, drive to the bank and sit across from a loan officer, obviously things are easier for you. So, instant approval is really good for our lending partners because it brings down the cost of lending. The AI does a better job of understanding risk, but it makes a far better product for the consumer who can just get that credit in a click.
What are the models telling you about the risk of the consumer right now? I know the demand side is there. Originations up 154% in the quarter year over year, but can your borrowers repay their debts?
Yeah, the American consumer has been in what I would call an elevated risk state for quite a long time now, a couple of years. We really look at that as what is the financial health of the American consumer, and what you see is, personal savings rates are really low compared to sort of a long-term average. Default rates across every category of lending, whether that's cards, student loans, auto loans, are elevated relative to where they would have been pre-COVID, pretty significantly. But we've been underwriting to this standard for a long time. So our loans are very calibrated, and our credit is performing exceptionally well. But what's really going on is prices are very high. Credit is not as accessible as it might have been a few years ago. And but that's the nature of our business, is we have to calibrate properly to the state of the market. But we generally think there's more upside than downside because we're already sort of in a very conservative underwriting position. And there are signs, as you see from a lot of your guests, that consumers are pulling back, right? Whether it's retailers, restaurants, airlines, everybody's seeing sort of price sensitivity from the consumer. From our perspective, that's a great thing. We like to see people being more responsible with their money, earning more than they spend, and beginning to save more.
Right. What do you think the picture looks like going forward on credit demand? Do households look to take on less credit because they're nervous about their jobs, or actually do you think they're forced to because their disposable income or their real wages, for example, take a pinch?
Yeah, Carl, it's really more the latter. I think, over our long history, we almost never see what you would consider a real softening of demand of credit from the consumer. It's just always there, whether it's buying forward on something, buying the next home, paying for school, et cetera. There's just always the need there. And, we can't always serve it because the risks will change, the interest rates will change. So sometimes we can't serve all that credit. But kind of what you might consider the gross demand from credit from the consumer almost never varies. It's just in the U.S. It's just kind of how we're built, and it's always there.
Yeah.
Dave, I'd love to just come to a broader theme. I mean, the scaling of AI in your own business, the improvements you've seen in the models. I'm just curious how you view sort of AI, broadly speaking, its usage in the enterprise. in corporate America and what your expectations are, given your own experience at Upstart and what you've really seen over in just the last, let's call it, year to 18 months?
Yeah, I mean, I've been in the technology industry for 30 plus years, so I've kind of seen it all. I was there early in the evolution of cloud at Google, and there's really nothing anybody has seen anything like this, how quickly it's evolving. It's gotten to a point where the technology has gotten far ahead of anyone's ability to actually make products with it and make use of it. So it's a really unique situation. I think for us, AI is our product, right? So it's a little different from how companies are maybe reducing number of employees or automating things inside. We're doing some of that stuff. But for Upstart, the core for us really is we're creating a product that is entirely powered by AI, which kind of means everybody should be sort of persistently and permanently underwritten. You should be able to get the very best rate for any form of credit in a single moment. And that's kind of a different world than any of us who grew up applying for a loan, whether that was a student loan or, God help us, a mortgage, the process you've gone through historically. And now just imagining that to be completely gone, that credit is something that's just there for you in a moment of time when you need it, the very best possible rate. These are the kind of changes that I think we expect across so many parts of our lives because of AI. So look, we're, not shockingly, we are AI optimists at Upstart.
Yeah.
Of course.
And of course, the financial services industry spending billions on AI to automate things just like you outlined. So we'll keep watching that space. Thank you, Dave.